Welcome to Investors Insights, where today's topic is bring on earnings. A lot going on. Before Ty talks about the correlation to the year 1995, I want to talk about an important topic, and that is corporate earnings. So as uncertainty around when the Fed will cut rates spike, and with the uncertainty around the election spiking in the last 2 weeks, the need for positive corporate earnings has never been more important, especially with where market valuations stand. So second quarter earnings season kicked off last week. We are watching carefully because last December, corporate America had just emerged from an earnings recession. Now, 6 months later, as seen in this chart provided by LPL Financial, earnings growth is accelerating and approaching double digits. That's great. With market valuations elevated, earnings must hold up here. And that's why it's so important. And they've been doing their part. Solid economic growth, supply chain normalization, effective cost control, and investment in artificial intelligence have helped fuel the strong rebound in earnings this year. So as it stands today, the S&P is expected to see EPS growth of 10.1%. That's earnings per share seen in this chart. It would be the highest pace of growth since the first quarter of 2022, when earnings grew by 9.4%, and more importantly, would mark the fourth quarter of positive earnings growth in a row. It's great to see. We're also looking at corporate profit margins seen in this next chart, where second quarter blended net profit margin estimates have remained stable at 11.6% over the last 3 months and may mark the third consecutive quarter of rising net margins. Also, you can see in this chart that expectations are for profit margins to continue to improve. So expectations are high with earnings season, and with high expectations comes the risk of disappointment. So weakish retail sales data suggests that persistent inflation as well as high interest rates continue to negatively impact the consumer. And this will be one of the themes we're watching for in earnings reports from U.S. companies. So we will be analyzing earnings season carefully here as the market is dealing with a lot of noise, and we're hoping the positive earnings reports drown out that noise. So Ty, we always say this, history doesn't always repeat itself, but it often rhymes. Talk about how this year is correlating well to 1995.
We kind of started the year talking about, and into last year, even talking about correlation to the 70s, where there was a lot of inflation bouts. And that still could be the case. It's a little too soon to tell, but one kind of period that has stuck out is 1995. And so as you alluded to, just because something happened in the past doesn't mean it's, gonna repeat itself exactly. But, a lot of times we look at signals from the past to kind of, look into the future or, kind of understand where we are currently. Well, back in 1995, we had a pretty similar market environment where there was a new tech boom. So at that time, it was more the internet was starting to come on. Of course, now we have AI. We had some strong employment back then. We had inflation, which was leading into the thought of a recession and thought of rate cuts. And the Fed was actually able to achieve their kind of only soft landing. And so that's kind of the, feeling right now is we might be able to pull off another soft landing. And so these time periods correlate pretty well. And then, kind of just diving in a little bit deeper, market returns were similar. In the first half of the year, tech was leading back in 95, just like it is now. And then once you got to that first rate cut, it kind of consolidated and financials took over. Well, we've recently seen the financial sector kind of pick up a little bit. And so it is pretty, I don't know the word, pretty unique, I guess pretty ironic of how these time frames kind of line up with each other. And so it's something we want to keep an eye on. It doesn't mean, tech's going to be weak and financials are going to lead. It's just something that, that 1995 seems to be a pretty similar time period and something we're leaning on here to learn more about where we are currently.
Yeah, as always, we look at the historical relevance of the market and what happened previously in different time periods and how it relates to today. So again, we are watching politics. We are watching the Fed to see when they might cut rates. And more importantly, this week, in the next couple of weeks, we are watching earnings very careful. And that's why we named this vlog Bring On Earnings. So it's very important right now. So if you have any questions, please reach out to us, call us, email us. Have a great week and continue enjoying the summer. Thanks.